Hi, everyone. Welcome to UGE International's webinar. UGE is publicly listed on the Toronto Venture Exchange under symbol UGE and on the OTCQB under symbol UGEIF. Joining us today is the company's CEO, Nick Blitterswyk, and the company's CFO, Paul Kanya. At the end of the presentation, we'll open it up for a live Q&A where Nick and Paul will be able to answer any questions you might have. If you're interested in asking a question and are logged into the web platform, you can submit your questions to us directly in the chat module. Please note, today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. Please note, this call is being recorded and will be made available on the company's website following today's presentation at UGEI.com. It's now my pleasure to introduce you to Paul Kanya. Paul?
Thanks, Jack. First off, I would like to welcome everyone to the call and thank you for joining. My name is Paul Kanya, and I am the CFO of UGE International. For this webinar, first I'm going to run through where you can find the full materials on our website and talk about any accounting policy changes we have adopted in 2020. Next, Nick Blitterswyk, our CEO, will review some of the key pieces of our financials and how they relate to the business, starting with our backlog. Then I will provide a high-level summary of our income statement, and Nick will provide updates on a few other areas of the business before we take your questions and wrap up the webinar. Our goal is to be mindful of your time and keep this webinar concise and to the point. We will be speaking relatively high level and focusing on the areas that we feel is most important to understanding our results and the business. I also want to remind our listeners that we report in US dollars, so the results in this webinar are also represented in US dollars, unless addressed otherwise. Although we will keep things fairly high level on this call, our website address is listed here, where you can download our full financials. In terms of our accounting changes, we have no significant changes that we have adopted this year. So with that, I will turn it over to Nick to start discussing our backlog.
Thanks, Paul. The biggest highlight of this quarter was the growth in our backlog, which went from $30.3 million at the beginning of the year to $72.4 million on March 31st. As our backlog grows rapidly, we have started to provide much further detail in our MD&A, so first I wanted to walk through what it all means. Here you can see the table that summarizes our backlog as seen in our MD&A. We thought we would take away the data for a moment and run through what each of the fields mean. This is explained in our MD&A as well. On the left side, we have our markets and the type of financing. As most of you will know, our project development business is currently focused on the US and the Philippines. Although we show rest of world on this table, we don't currently have any backlog outside of these markets, as we are laser focused on markets where we are or feel we can be a market leader and believe our existing markets offer great growth potential in the coming years. In terms of the type of financing, the key to our recent trajectory is our move to self-developing and self-financing projects. In terms of self-developing, all of the projects in our backlog are now self-developed, so that transition is complete. In terms of self-financing, we currently have a mix where in some situations our clients wish to finance the project, and in some situations it is best for UGE to play the role of financier. While we expect the majority of our projects going forward to be ones where UGE is the financier, we are happy with the mix we currently have. The one other market to mention is our internal engineering and consulting practice. This is an internal profit center which completes the design and engineering work for our projects in the US and the Philippines, and from time to time picks up external consulting engagements as well. Now, across the top of the table, we start with the stages, which is a new classification system since our last MD&A. In essence, the stages track the maturity of a project as it progresses from initial commitment through to deployment, going through the most important steps in that process. The last two stages relate to when projects commence and are in deployment. The count and capacity relate to the number of projects in each bucket, as well as the project size in kilowatts. For those less familiar with the solar industry, the size represents the rated maximum output of the project at any given point in time, and here we track that in kilowatts. Now, regarding the project values, which of course make up the backlog number, the breakdown is as follows. First, if a project is client financed, the description is straightforward. This is the gross amount of revenue that UGE will earn by completing the project. When a project is UGE financed, though, this value represents our calculation of the project's net present value at our estimate of market rates. The difference between the total value and the remaining value comes down to revenue that has already been recognized on the income statement, which primarily relates to client finance projects, since in that case we recognize revenue on a percent completion basis as the projects are built. Lastly, the last three columns provide a summary of the revenue profile for each bucket of projects. The average duration is the simplest field to understand. For each bucket, this is the average contract length for those projects. As you will see, the average in the US is 25 years, and in the Philippines, it is 15 years. And of course, it is 0 for projects where we are not the financier, since for those projects we are paid up front. Next, year 0 revenue and year 1 revenue is our way of demonstrating when we will earn revenue from our projects, as our self-finance projects generate most of their revenue throughout the project lifetime. For client finance projects, year 0 revenue is equal to total revenue, since all revenue is earned by the time the project is completed. But for self-finance projects, year 0 revenue is typically a minority of the total revenue to be earned, and usually relates to government incentives in the US and our unique project structure in the Philippines. Meanwhile, year 1 revenue is our estimate of the revenue the project will generate in its first 12 months of operation, as a proxy for the annual revenue profile of those projects. Of course, this will become recurring revenue for us in the years to come. So now we'll go into the numbers, first looking at the US backlog. Here, we can see the figures as we discussed. Across the US backlog, we have 25 projects, of which 19 are self-financed. In total, this represents approximately 37 megawatts of projects. In terms of project value, the US accounts for the vast majority of our backlog at approximately 66 million. The US projects also represent approximately 10.7 million in shorter-term project completion revenue, and then approximately 6 million of recurring revenue earned each year over the project's lifetimes, with average project lifetimes of 25 years. In the Philippines, we have 24 projects in our backlog representing over 6 megawatts of projects, so you can see our Philippines projects tend to be a bit smaller than those in the US. The total remaining value is approximately 5.5 million. Because of the structure of our Philippines projects, which include both a service portion and a customer loan portion, we recognize a more sizable portion of the revenue upfront, as seen here. In total, the annual revenue from the self-finance projects in the Philippines is approximately 500,000 over 15 to 20 years. And lastly, as mentioned, we don't currently have any project development backlog outside of our US and Philippines markets, but we do pick up engineering and consulting engagements through our subsidiary, which is doing some really cool work around the world. Just highlighting the final numbers again, as of March 31st, 2020, our backlog was 72.4 million US, based on the 43 megawatts of projects we had in our backlog, which was growth of 140% since the beginning of the year. We also had our first 7 self-finance projects in construction, as denoted by self-finance projects within stage 5. I just want to thank our really hardworking team for their focus and dedication throughout the COVID-19 pandemic to staying really focused on this unprecedented backlog that they have built. And we look forward to converting it into revenue over the next couple of years while adding many additional projects as well. With that, I wanted to turn it back to Paul to go through the income statement.
Thanks, Nick. As Nick mentioned, next I will provide the highlights of the income statement. Starting with revenue, the first quarter of 2019 was the last one in which we had meaningful revenue from our EPC business, which has since been wound down. That led to an overall revenue dropping. However, when only looking at our project development revenue, it actually grew 212% in the quarter, as that business continues to grow rapidly. This was despite the impact of COVID-19, which we'll discuss later in the presentation, as construction of projects was temporarily halted in early March. Regarding gross margins, as we shifted the business toward project development, our margins have been consistently above our targets. This quarter marked the 5th straight quarter in which we exceeded our 23% target at 27%. As part of our turnaround, which started in the fall of 2018, we lowered our expenses to a rate of approximately 3.2 million per year and have managed the business at these levels ever since, despite the strong growth in sales. Lastly, though we are not yet at our goal of being consistently profitable, we believe we have the right ingredients to get to those levels in the near future, based on our growing revenue base, our higher margins, and our lower expense levels. We will continue to focus on execution of our backlog throughout the year to get to that point. Next, Nick will go into more detail on a few other key items.
Thanks, Paul. So next I wanted to address the COVID-19 pandemic and its impact on UGE. As mentioned in our year-end statements 1 month ago, starting in March, we saw construction halted across virtually every region we operate in. This slowed revenue recognition and project progress in Q1 and will have a similar impact in Q2 as well. The good news is that as of today, construction has restarted for just about every project that was initially impacted, so we are once again on site making good progress towards our goals. Meanwhile, as witnessed by our rapidly expanding backlog, project development was able to continue nearly unimpeded. Even with the construction slowdown, we still expect significant growth this year. The other side of the pandemic has been varying levels of government support available. After the close of the first quarter, we were able to secure a Paycheck Protection Program forgivable loan and an economic injury disaster grant in the US. We are also leveraging the 75% wage subsidy in Canada, and we're able to leverage the CEBA loan program as well. All of these programs have helped UGE successfully manage through the pandemic. Next, I wanted to provide just a very quick update on the winding down of our former EPC business. In our webinar 1 month ago, we mentioned that we were awaiting the court's acceptance of the proposal, which was already accepted by creditors. While we don't yet have a specific date for that to occur, we expect it to be rescheduled in the coming weeks. Once the proposal is accepted, we expect to see about a 54% decrease in the short-term liabilities of UGE Canada RE, with the remaining portion paid out over 2 years. Important to note here is that the majority of the company's overall working capital deficit is attributable to UGE Canada RE, so this will meaningfully improve our consolidated balance sheet. I also want to note that we don't expect any asset write-downs related to this proposal. Rather, we took any such write-downs for the business in 2018 in the form of writing off goodwill and project-related value. Paul, back to you.
So with that, we'll wrap up the prepared remarks by pointing to you where you can find more information. As mentioned earlier, our website is regularly updated and contains all our financial filings and other updates. You can also follow us on Twitter and get links to announcements and other media. Thanks again for tuning in today. Jack, back to you.
Thanks, Nick and Paul. If you're interested in asking a question and are logged into the web platform, you can submit your questions to us directly in the question module in the bottom of your screen. We will now take a moment to develop the queue. Thanks. The first question we received is regarding the pandemic. Do you anticipate any delays? Do you anticipate any delays in the supply chain? Thanks.
Yeah, thanks. So in terms of the supply chain, when the pandemic was first hitting Asia, we did have some delays at that point in time. So, I'm thinking back to late January into February, where equipment out of, say, for example, China, was having some delays getting to the Philippines for a couple projects. And I'd say those delays on average lasted 2 to 4 weeks. So it wasn't anything that it was that material in the big picture. And since then, we haven't seen any delays on the supply chain side of things. So mostly it's been like local restrictions on construction that has caused most of our delays that we've been dealing with.
Thanks, Nick. The next question we have is in regards to the U.S. operations. Are there any opportunities in the US outside of New York?
Yeah, so there definitely are. Our office is in New York, and so a lot of our activity has been New York and New Jersey, and a little bit outside of those regions as well, as far south as Virginia and up to Connecticut, say. Now, a big aspect actually of recent pipeline growth or recent backlog growth, we actually announced 3 projects in Maine last week. So Maine's a really interesting market for us, and one that we're quite excited about. So it has. To make a long story short, there had been kind of restrictions on solar activity based on a conservative government there up until, I want to say, a couple of years ago. And in the last couple of years, it's really started opening up, and it's I guess I would say, like kind of a pent-up demand situation. And then in addition to that, the regulations have just been kind of loosened up to allow some of the things that allow us to do community solar, which is something we've talked about the last couple of years, and what a lot of our New York projects are as well. So um, at this present time, actually, a good portion of our backlog is from those activities in Maine. So we're really excited about that market as well. And I think, more broadly than that, most of the country offers, varying levels of opportunity. So there's definitely a lot of other opportunity, but for us, we are really focused on areas that we feel we can be a leader in and have a lot of growth ahead of them. So, I've mentioned before, like Metro New York. It's very, very early innings. Probably market penetration so far is maybe 2 or 3% of the addressable market. It's starting to grow very quickly. We see the Metro New York region as having maybe like $1 billion worth of community and commercial solar projects built this decade. So if we just focus on being a market leader here, like we already are, the shareholders of UGE will all do very well. So that's really been the focus for us of late.
Thanks, Nick. The next question is in regard to the design and consulting business. What's the trailing 12-month revenue on the design and consulting business, and what is its backlog?
Yeah, so the design and consulting area of the business, so it does, in essence, like it's an internal profit center. So it has internal revenue and external revenue. The external backlog shows up in that table. And I don't have the table in front of me, but I know it was like high 5 figures. And yeah, I don't have the numbers in front of me, but I want to say that the revenue from that business last year was for purely external projects was in the range of 300 to 400,000. This year, we're expecting some growth on that, but that gives you a sense of the size of that business. I think it has a lot of potential to grow. It's not as to give you an idea. Yeah, I mean the revenue you get from that portion of a project has good margins on it, but it's not nearly as large as project revenue. And so, yeah, hopefully that gave enough information on that question.
Thanks, Nick. Where do you see sales trending in the next 12 to 24 months?
Yeah, so we just had our best quarter ever in terms of booking new projects, and so I think that's a good sign of things to come. I know at the end of March we had announced some of the projects, and I think it's our Q1 was certainly our best quarter ever, and I know one of the months in there was our best month ever as well. There's a lot of traction for what we're doing right now. By no means are we at the end of our pipeline. I know it actually mentions in our MD&A that we have a pipeline in addition to the backlog, which is over 200 million worth of opportunities that we're currently scouting and trying to bring to fruition. So yeah, I expect sales to continue at a very good pace going forward, and I think it's okay for me to mention as well, like since March 31st, of course, we've won additional projects as well that wasn't in the backlog on March 31st as well. So we see a really robust market for what we're doing. I'd be remiss not to say that like our model is for community solar projects, which is probably now the majority actually of our backlog. For those projects, if you're a building owner with a big roof, then we're actually like a tenant. We're paying you for your rooftop, and we're selling that energy in essence like into the grid. And so if you're a real estate owner that's struggling during the COVID-19 pandemic or the economy going forward, then we're helping you by being another tenant for your building, right? So from that angle, we certainly don't expect sales to be negatively impacted, and we actually are experiencing them being positively impacted.
Thanks, Nick. Do you see an escalation of the U.S.-China tensions to reduce your access to solar panels?
So yeah, good question. Although actually in the U.S., panels aren't actually purchased from China, and maybe there's an exception to that, but it's fairly rare. I can think of a couple exceptions as I say that, but it's a small minority of overall solar panels that are used in U.S. And the reason for that is because there has been escalations at times between the U.S. and China with restrictive measures against the import of solar panels from China. So actually, like most of the panels that we buy for the U.S. market, without bothering to go into too much detail, they actually come from other Asian countries like Vietnam, like Thailand, etc. And so from that perspective, that wouldn't cause more of an issue than we've already had over time with the tariffs and everything else that already exist in this industry. But obviously, we just work around those.
Thanks, Nick. We'll take one more final question. What are your capital needs for your milestones moving forward?
Yeah, so one thing that we haven't talked about actually on this webinar before, but we've mentioned maybe in like recent interviews and things like that, is that when we're putting, like when a project gets to stage 4, which is the first contracted stage, we have put together financing for that project, or our client is financing it themselves, and that financing is fully paying for the cost of deploying that project, including like our kind of like EPC margins and so on, like at the corporate level. So from that perspective, it's if we're deploying a $72 million backlog over the next couple of years, at least we can say that the projects themselves are generating positive capital as we do that. And I think that, and if you look at our balance sheet or what have you, it's not as strong as we would like it to be. And so in February, we did a small private placement amongst some existing investors, and we're happy to do that to boost the capital position of the company. I think that I think to be open with like our working capital position, it's enough to continue to go forward, but at the same time, we would like it to be stronger, and so we'll look for opportunities for it to be strengthened over time as those opportunities present themselves.
Thanks, Nick, and thanks, Paul. And thank you everyone for joining today's webinar. Today's webinar recording will soon be made available on UGE's website at UGEI.com. If you have any additional questions that have not been addressed on this webinar, please feel free to email UGE at investors@UGEI.com. Thanks again. You're now free to disconnect.